tuned into Mystockscanner Live. Forget the noise, forget the stress. Every stock we cover comes down to three questions: quality, upside, and timing. And it doesn't change no matter if the market goes up or if it goes down. But it doesn't mean that you don't have questions. And let's get started with the men with the answers, Hans-Henrik Nielsen and Liam Flavel. Hans-Henrik, how did you sleep last night?
Perfectly. Perfectly. That is how it is to have a fixed strategy.
Liam, question for you. Did NVIDIA burst your bubble in the market yesterday? Because that was a volatile day.
It was quite disappointed, but I'm with Hans on that. I mean, the two things I check when I go out of the house in the morning are, have I got my trousers on, and is the strategy still intact? So I get one out of two most of the days.
I'm not going to ask you to stand up right now. Remember, I do ask the questions, but you can also ask your questions. Just send them to us at FOMO@mystockscanner.com. And on the show today, we got a very packed show. We, of course, are going to look into the roller coaster ride the market took yesterday. Stocks saw the biggest midday reversal since April, and NVIDIA was leading the way. Also in a brutal sell-off is Bitcoin, and that got our attention. We're going to talk about it in the show today. But just like to show you also that everything were not in red. Walmart did pull into green. How did that happen? We have the answer. And finally, it is Friday, so we have the face-off, and we pit two Danish breweries against one another and take them through the three-point playbook at the end of the show. Who serves up a winner? We shall see. And we serve up a number of the day, and because the market are full of big numbers, I'm going to go low on the number. It's going to be 180, and what that relates to we will get to in a minute. But first, let's go back 12 hours, because that's about the time when the US market closed last night, and that wasn't a pretty sight. Hans-Henrik, big question for you. What happened yesterday?
Yeah, that a lot of people were asking themselves that for sure. And if we just take a quick look at Nvidia here, it was not like the drop was massive, 3% in a stock that you've seen before. It was more the drop. It started after earnings to jump up here, and then it was just crushed at 8-9%. I think it was something like $500 billion or something like that disappeared from top to bottom. There were several things in play here. It was not just one trigger, but one of them was that the initial numbers from NVIDIA, as we talked about yesterday in the special edition, were good. However, people started to look into the details, and they didn't like what they saw with NVIDIA. Yes, they are selling a lot. However, it is like the customers are getting a lot of chips on credit. They are not paying for them, or at least they are not paying the full amount. So it's kind of on borrowed money, and people didn't really like to see that.
I have to call in that sense, that call what you said on the show yesterday. You almost predicted that the stock was going to go up, and then it might sort of, you said, deflate or just seep away during the day.
The part about predicting it was going up, that part is quite easy, because we have something called the pre-market, where the big players are playing in some pools of stocks before. We can see what's happening there. So that you can see here in the pre-market is also set to drop. So the rise up here were easy. What we did see yesterday was an overall movement towards risk off. We looked at crypto, we looked at different things, and we said in that sort of environment, we often see these big gainers, especially if they're quite expensive. We see them being sold out after the news. So it was a guess. I was guessing at around break even, so I was a bit too optimistic.
But at the same time, one of the things we also talked on the special yesterday when we had an extra broadcast, and that's why you always check in on our social media and on our platform to see what we're up to. We also talked about that there would be sort of a ripple effect. In that sense, we thought it was going to be a positive ripple effect at first, and it would sort of, make the positive moves for a lot of different other companies. Of course, if there's a ripple effect going positive, there's also a ripple effect going negative, and we saw that.
Definitely.
Basically, this is looking like the worst week since April for the stock market in the US.
Yes, and we should still remember that people are talking about all of this. Let's just find the US index here. People are talking about panic and all no, sky is falling. But if we just take a quick look here, the overall market is down 5.7%. That is something
Wow.
statistically should happen at least once or twice per year. It's just that we have been used to going up, and everyone can walk on water, and now we are 5-6% down, and people panic.
If I can just arrest you on the chart that you put up on your screen, and I know somebody's just listening, but then they have to see it on YouTube. You have put in a big bar that goes across the screen right now, and I know that's where you sort of, that's what you're looking at.
It's not magic areas, but market tends to move in structures, and that is because there are a lot of big players that have kind of the same calculation as to when is a stock or when is a market expensive or cheap and so on. And we often see that the areas where there have been a lot of accumulation, like here, often tend to be the new focus points. There are both some structures in it, and there's some what's called behavioral psychology. How do people tend to think around money and round numbers and so on and so forth. And we have pointed out 6,300 in S&P 500 for a while now. That would be a logic way to a logic place to go down to.
And as said, we are trying not to predict things, but we will, of course, talk in depth during the show about a lot of things. Amongst those, also Bitcoin. We'll get to that in a minute. But first, Liam, I'm going to take you on a little ride with this guy because, yeah, he doesn't look too happy today. He's the mood is not good. The speed is not really impressive, and it's going a little bit down. Of course, we're talking Hans-Henrik and NVIDIA. Well, we have NVIDIA stocks. We got to sort of tell that. And we are basically in the same cart as Hans-Henrik here. We're going a little bit down.
We are. NVIDIA, I mean, as Hans just said, had a bit of a bad day at the office yesterday. I think Jensen probably dropped a couple of leather jackets, and that's about it. It's an interesting market at the moment. So I was reading today, there's a piece out from Rothschilds. They've got an analysis arm that were looking at NVIDIA, and they're quite bearish on it now, because they were saying that the cost for a gigawatt in power of compute for a hyperscaler like Microsoft is $40 billion. And they will make, after power costs, $8 billion a year on that. For them to make their 45% margins, their profit levels that they do, they're going to have to run these chips for 8.5 years. And at the moment, they're saying they're only going to last 3 to 5 years before they're either obsolete or just kaput. And that's where the market is starting to look at these numbers and say, actually, we don't believe some of these sort of really nice growth levels. And it comes down to PE levels. At the moment, if we're looking at NVIDIA potentially earning $4.5 dollars per share next year and $6.5 per share next year, the year after, if we just drop those down to 5 and down to 3 and keep the PE levels at the same level, we can see that magically we get a 16% loss in NVIDIA. It's that simple. That's all the numbers we're looking at the moment, is what are the earnings and what are investors prepared to pay for that earnings. That's the PE ratio you got here. And the analysts are suggesting that investors will pay 34 times those earnings to buy a share in NVIDIA and buy $1 of their profits. But if those numbers change, and they can do very easily, we saw that yesterday, then the whole picture changes completely.
There's also the thing was, there's a couple of things that we have noticed over time. One is the sort of the circular motion of money, how money floats from one company to another and magically comes back to the company that started sending them, in this case NVIDIA. When they invest in different companies and then they get them back. That doesn't mean that they grow. They basically just get back what they send out.
No, there's a certain amount of financial engineering going on at the moment in that as well. So what happens is someone like OpenAI will go to NVIDIA and say, we want to borrow $40 billion worth of your stock. So let's say, AMD or something like that is approached. AMD will say, okay, we'll announce that we're doing this deal, and OpenAI are going to be prepared to pay this money to us. AMD's share price shot up 52% since the beginning of September, and it went up by that 30 billion, 40 billion that the company, that OpenAI suggested they would pay. They then use that as a down payment. Their stock price goes up. OpenAI are on the hook for 30 or 40 billion dollars. There's a lot of debt going on. There's a lot of IOUs going on here. So that's what the market is also scared about at the moment. You've got $1.5 trillion of debt that OpenAI have signed off at the moment, and they're saying, when are they going to make that money? How are they going to make that money? So we've been talking about this for 6-7 months now, and we've been saying we'll carry on investing while Nvidia is, and all these stocks are going up, but the music will stop at some stage, and that's when we need to be listening, and it could be now.
Let's hear what tune Hans-Henrik has going in his head, or basically what he's thinking about NVIDIA.
Yeah, the thing about NVIDIA, and it's not just NVIDIA, it's the overall AI chip universe, is that already just after the summer, I think, was when some of these big deals came out, we actually called it and said, well, there's something off here. And it's what you said a couple of months ago, Liam, you wrote an article saying the math don't add up here. With the how quickly the chips depreciate and get obsolete. It's not like we told you so kind of thing, because we couldn't exactly set our fingers on what was wrong. But now we can see Michael Burry have been shorting these tech stocks and so on. So when you have been in the game for a long while, you start to get a sense when something is off, and something is off.
We are definitely we will get back to NVIDIA in the coming days. That's for sure. It's the biggest company in the world. We will be talking more about it. And on the show here, we will also have things that are green and not just red, as we have been talking so far. We will have face-off between two things that are in green, Royal, Unibrew, and Carlsberg. I'm looking up at my screen, both up with more than 2%. As a matter of fact, they're leading the market today. So we'll get to that as well. So it's just to say to those who are watching and listening, there will be some positive tones as well. But we stay with the macro part of it, the bigger picture of it. And that's this pretty side from Bitcoin. Again, Hans-Henrik, if I look at my screen, it's up a little bit here in the last few minutes, but it was down, I'm almost going to say French kissing 80,000 at one point, and now we're at 83.
Yeah.
Volatile day for Bitcoin.
Yeah, when you say it's up a bit here, it's just down less, basically. I think it's down 4 or 5%. So it's almost a neutral day today, you could say. No, there's a lot of people panicking completely in the Bitcoin market. I should say right away, I'm not in Bitcoin myself or Ethereum or any crypto. We are not in any of these MicroStrategy kind of companies either. But I do want to touch on it. First of all, we do look at it because it has become kind of a risk-on, risk-off indicator. So if people are selling out of Bitcoin, there tend to be a risk-off sentiment in the market. But when people panic, they should remember, and we tend to forget that easily, this is Bitcoin on a weekly chart for the last 12 years. And if you look at the drops that have been in price here, in the price here, 77% down, 86, 83, 71, 77, then 31, and right now we are down a measly 34%. That hurts, I know. But I just put a circle down here. If we should go down 80, 85%, as we have done a ton of times, we should end up in 18,000. So those 34%, I do not want to hear anyone complain about them. If they can't stomach 34%, they should not be in crypto. End of story.
And the thing is, of course, as you mentioned here, and as your chart show, is that the numbers have just gotten higher. So the thing is that if you were buying in at Bitcoin at $1,000 and it dropped 80%, you would be at 200. Basically, take that to 100,000, and you would be down to 20,000. A lot more money lost.
Yeah, there's some structural changes that we are looking at, because back in the early days, it was only private investors, retail investors that were in crypto, whereas now we have Bitcoin futures, we have Bitcoin ETFs, we have leveraged Bitcoin ETFs where they buy Bitcoin with borrowed money. We have those what is called Bitcoin treasuries, that is these MicroStrategy companies that buy Bitcoin, for borrowed money. The price goes up. They borrow against their own Bitcoins, buy more, and so on. So what we are looking at here is that we are quite interested in seeing how this constellation plays out. There's a lot of unknowns here.
One thing for sure is that I'm not starting to sing Don Henley New York Minute about a stock exchange broker that jumped off a roof, but so we're not going back in time and doing that. So I'm gonna get some positive music going here. Let's go to the supermarket. Let's go to the biggest one of them all. They came out with numbers yesterday. And I won't say they surprised the market, but it became a surprise in the market because the stock was up 6.5%. Wow.
It was that pretty much the only one that had a good day at the office yesterday, I think. Walmart had a fantastic report. They beat on revenues and on earnings, so they got the double whammy there. The interesting thing about Walmart was actually their plan that they came up with last year actually came to fruition and is actually driving huge amounts of growth in the company. So what they did last year was they decided they were going to challenge Amazon in the home delivery business, and they're still the biggest retailer in America and I think the world. So they thought, no, Amazon are encroaching our territory, we'll pay them back a favor. And what they did was they changed a lot of their stores to be fulfillment centers as well as stores that people can walk into. So they effectively had a ready-made delivery network out in America, and that had a 27% growth last year, which really worked. Also, they've got a bigger proportion of client or customers that earn over $100,000 visiting their store now as well. So I think you're seeing a migration from the larger, more expensive brands coming in and then coming into Walmart. So they're benefiting from this. But if we do a very, very quick playbook analysis on here, 3 questions we ask on the playbook: is this a quality company? Is it undervalued? Is it cheap? And is it the right time to buy? We can see very quickly, I won't go through any of the metrics here because I know we're pushed for time a little bit, but we've got green all over the board. We've got a little bit of red over here. It's a little bit expensive when you look at price to free cash flow, but it's a great company. From a is it cheap point of view, sort of in the middle area at the moment. It's not bad, but we'd probably wait for a bit of a drop in the market to come down. And it is pretty much in our buy zone. So we're not far off. The indicators are all going green. So good company.
I will add something to it, Liam, because in that sense that Walmart is definitely not the most expensive store in America when it comes to being a supermarket chain or anything. And it is right now where we see good deals in that sense that they are driving the market up in green, 6.5% for Walmart. But on Wednesday, TJ Maxx, which is sort of a discount store, also it came to an all-time high in the market on Wednesday. It seems like the people with money, those who have money, are just going cheap now.
That's what often happens in these sort of times. Yeah, we know consumers around the world, and specifically we've got a lot of information on the US consumer, they're being squeezed. There's a top 20% that are fairly well off in America that can actually survive week to week and month to month on their paychecks. But you're seeing an awful lot of pressure on those lower tier workers. That's actually, they're having to shop cheap and go to the lower price stores. And that's just filtering up to the top level.
If I might add there, Walmart did every year Thanksgiving, they are collecting a bunch of groceries and saying, what does it cost for a family to hold a Thanksgiving? And this year, Trump were out saying, you can see it's a lot cheaper. But first of all, they have only picked 75% in number of the groceries items they had last year. And secondly, they had moved to all discount brands. So they had moved away from the quality brand and down to discount brand. And that is a good picture of what is happening in the consumer markets in US right now. They might get food enough to be full, but it's lower quality food they buy.
Let's not give up on quality here. It's a Friday on our show. We have top quality for you. I'm going to serve you up the face-off. Here we go. Face-off between 2 Danish breweries. I'm gonna look at you 2 guys and say, Liam, you deserve the best beer in the world, probably the best beer in the world. Carlsberg. I know you're gonna disagree. You're Irish, for crying out loud. And Hans-Henrik, you're gonna get Royal Unibrew. Guys, take it away.
Yeah, Will you start out with Carlsberg, Liam?
Yeah. Just share my screen very quickly. I mean, Carlsberg, everyone knows Carlsberg. I think it's one of the top 3 in the world for the brands they've got. I must admit, having done some research on them now, I don't really appreciate being given Carlsberg because they also own a lot of ciders in the UK, and I hate cider. Since I was about 15 and a half, I had a
You take it
bad
personal.
evening with cider. So yeah, I am taking it quite personally. But as a stock, I suppose it's okay. It's from a quality point of view, we've got a quality score of 60. The earnings are sort of okay, not really going anywhere, and the revenues are going up though. So obviously their costs are starting to increase slightly. Analysts pretty much the same all the way through, and we can see their returns on the investment they put in, the capital they put into the business are actually working quite well for them here. So yeah, they're not a bad company. From an upside point of view, if I just switch to the valuation chart very quickly, we've got this big hole here where they had a on their actual sort of actual accounts, they had a negative year, but that's because they had there was probably some sort of sell or something like that in their business, or some issue in their business which wasn't going to repeat. So if we move to earnings, continuous earnings here, we can see that actually this is fairly more solid. And just it's difficult sometimes to place where you put the red line, but it's got to go there at the very least. So it's a fairly okay upside. In the worst case, in the best case, yeah, it's got a good sort of potential going up there. But looking at this, there's not much movement in earnings per share. There's not much growth there. It's not something that massively excites me, apart from the beer part.
Okay, we got that. Hans-Henrik, better get to you. We're gonna be a little longer today. I can see that we're gonna definitely go over with a minute or two, maybe because you guys are talking beer. Let's get to Royal Unibrew here.
Yeah, to be honest, I'm a bit more excited about Royal Unibrew than I am about Carlsberg, and it has nothing to do with the beer itself. Earnings per share is growing a bit faster. It has a better quality. Carlsberg was 60, the Royal Unibrew is 88. We can see that revenue is rising, flattening a bit here. Return on capital employed has been stalling somewhat here, but free cash flow is going up and they can easily pay off their interest. So nothing big here. When we look at the value chart, they are in a bit of a better situation than Carlsberg. We can see there are some obvious areas where market have thought they were cheap, so we can put the red line there, and there are some areas where they have thought it expensive. Could argue that could go up higher, but we do like to be a bit conservative. So right now there is somewhere between a break even in bear case scenario and up towards 62% in bull case, and that is sloping up a little bit here. We do like it to be a bit steeper, but I do like the value graph better in Royal Unibrew than I did in Carlsberg. So if I were to choose between the two, I would choose Royal Unibrew. Also, quickly looking at our point 3, is now the time to buy. We can see here that it has broken up through the 200-day moving average here, the black line. We had earnings here, and we are now in double green on the 2 MTI indicators, and we do like to see that. So some sort of a bounce here would make it a nice buy for us.
There's definitely a beginning.
Carlsberg is a no-go for us.
Yeah, if we just quickly look at Carlsberg here, that one is just caught below the 200-day moving average and is in double red. So not really of our likings.
We're going to stick with the theme of those two for the number of today, because the number of today was 180. That's how many beers every Dane drink every year. We basically drink 60 liters of beer every year. That comes out to, if there's 33. Yeah, I know, because I have the numbers for the Irish people. They drink a significant amount of beer. In a 2019 study, they drink, and this is the average, Liam, 436 pints of beer per year.
Oh, that's the women.
Those are rookie numbers. I thought
Number.
day of the number were another thing, because of the movement from top to bottom in the Nvidia stock yesterday equaled about 180 times Denmark.
There we go. There we go. Okay, guys, we're running a little late on the show here, but I'm not going to let you off the hook because when we come back on Monday, we of course are coming back with a 3-point playbook, which means that we open our portfolio and take a look into that and see how it's doing. Liam, we are up, if I look, 30.5% over the year. We have dropped a little bit in the week. How did we do yesterday, by the way?
We had a drop of 0.7% when the Nasdaq was down, what, 2.2%? So we're that's why we slept all okay yesterday.
Yeah, I'm glad you don't sleep on the show. So maybe if you drink 436 beers, you'll sleep on the show. But let's not get into that. Monday is the 3-point playbook portfolio. We're going to open that. And next week we have. It's not a big earnings week. I admit. I was looking for things, and I will mention Dell. I will mention Alibaba and Workday. On the Danish side of things, we get Rockwool, and that's about as big as it gets. But we have some eco numbers, which mean if we get them, we don't know. But on Tuesday, US PPI, US retails, US consumer confidence. Wednesday, US GDP, core PCE, new home sales. Thursday, remember, Thanksgiving in the US, the stock market is fully closed. Friday is half a day in the US. They open until 1 o'clock. Maybe they should have opened at 1 o'clock.
Lazy bastards.
Yeah, they are a little bit lazy over there. Have so many holidays. And I know that you're already working on something for the weekend, Hans-Henrik, the weekend wrap.
Oh, yes.
What can we expect?
Oh, well, I am going to look at something really exciting. I know it'll excite everyone, and they will be the center of every family party from now on. That is the trade balance numbers from US, where it seems, oddly enough, that a tariff war is not working very well. Who would have thought?
We shall see what Hans-Henrik means. And I just realized that Liam, as a matter of fact, on the wall has a picture from that night when he had 436 beers. I just realized that now. How about that? Remember, if you have a question for us, do write us, FOMO@mystockscanner.com. I'll pass those questions on to Hans-Henrik and Liam. They're the guys with the answers for you. That wraps up the Friday edition of My Stock Scanner Live. 3 questions, 1 playbook, and smarter decisions every day. Weekend wrap on Sunday from Hans-Henrik, and more My Stock Scanner Live on Monday. Happy weekend and happy investing, guys.